What's up, traders? So today we're going to be talking about the New Zealand dollar versus the US dollar and why I entered this trade. As you see, we're about, let's see, about 52 pips up. And basically what I'm going to be talking about is why we entered this trade, basically price action, technical analysis, all of that. Fast method, just something I put together, helps me trade. It's basically the only method I use to trade. And yeah, we don't use any indicators or anything like that unless you count the moving averages as indicators. But those are really just confirmation. I don't really use those to enter or exit trades. So what I'm going to do is pretty much open up a new chart and get into why I entered this trade long. Alright, so I'm going to go ahead and open this one up. Alright, so here we have the New Zealand dollar versus the US dollar on the 4-hour chart. Alright, so first things first, the fast method, right? So go ahead and type this out for you guys. Where are my, there we go, text. So fast method, F, A, S, and T, right? So what does each of these stand for? All right, F is going to stand for Fibonacci, right? If you need a little help on each of these little subjects, just go over the individual videos that describe how to do each of these. All right, A is going to stand for analyze trend, right? S is structure, aka supply, demand. Structure also goes into the trend, but as far as my method goes, the fast method, structure and supply and demand pretty much go hand in hand. And then T is going to be trend lines. Alright? And also with trend lines is counter trend lines. Alright, so this is the fast method. Let me make this bigger for you guys. Alright, so this is the fast method, right? This is all I use pretty much to trade, right? Keep it simple. You don't need indicators. You don't need all that extra stuff. Keep it really simple, right? Now this is not in order. I just put it this way, F-A-S-T, because it spells out fast, easy to remember, right? But the first thing I do is I analyze the trend, right? So I use multiple time frame analysis, and I start usually on the weekly or the daily. For this particular trade, what you want to do is, as far as your multiple time frame analysis, go ahead and write MTA, multiple time frame analysis, right? You want to use 3 time frames, no more than that, because you're going to trip yourself up, right? So use a sequence. You can use weekly, daily, 4-hour, for longer term swings. What I really like to use though is daily, daily, 4-hour, 1 hour. Not the best typer over here. Alright, daily, 4-hour, 1 hour, right? So my daily I use to basically analyze the overall trend, right? My 4-hour I use to analyze the immediate trend and breaks of structure, things like that. And then my 1 hour I also use for breaks of structure and pretty much analyzing or making entry. I use my 1 hour to make entry. You can even go down to the 5-minute to make entry, but I mean, really, if you're doing this right, 1 hour is all you need. It's a little more true and reliable than the 5-minute chart. But yeah, the 1 hour, and then also use the 1 hour to stack trades and add on to your trades that are already going in your favor. So put that up there for you guys also. So we're going to start with the daily. So let's go to the daily chart. Alright, we have our daily right here. So, what do you see on the daily, right? If you look, we had from May to August, the daily was in an uptrend. Easy, right? But now, the daily has broken that uptrend, and it's currently in, or it was, in a downtrend, right? Something like that. And now it's broken out of this trend line also, right? Oops. So I'm analyzing the trend. What are the things I'm looking for, right? Analyzing the trend. What is a trend? An uptrend is a series of higher highs and higher lows, right? More importantly, higher lows. And a downtrend is a series of lower lows and lower highs. More importantly, lower highs. So, if we look at this daily trend here, what do you see? Let's go ahead and draw it out, and I'll show you what I see. What I see here is I see a top, I see a bottom, right? So I have a high, I have a low, right? I have a lower high, a lower high, then I have a lower low. I have a lower high, lower low, right? And what do we have? We have a lower high, fails to make a lower low, and then we have a higher high here. Alright. And now price is making a higher low, or what seemed to be a higher low. We have a nice engulfing candle here forming. So that's our trend analysis on the daily. So as far as I'm concerned right now, price is making higher highs and higher lows. So we're currently in an uptrend on the daily is what I see. So uptrend, daily up, cool. Drop down to the 4 hour. Also, what you can do, what I do here is I draw, so fast, right? We have Fibonacci, analyze trend, structure, and trend lines. So this is trend lines and analyzing the trend with our higher highs and higher lows. Then we have structure, right? As far as structure goes, we have a supply zone, a daily supply zone here and down here, okay? Our first daily supply zone was here at the very bottom. Draw from the lowest part of the wick to the body, the top of the body of the candle prior to the big move, right? So this would be our demand zone, this would be our demand zone. Then we have another daily demand zone here. From the bottom of this wick to the top of this candle, we have a daily demand zone there. And as you see, price is reacting off of this demand zone. Alright, why is this demand zone? One, this is a demand zone because it broke this daily downtrend line, right? Why is this a demand zone? Because this area broke this previous high over here. This area broke this previous high with this candle here. So this becomes a daily demand zone. Now, if we slide down to the 4 hour chart, we can get deeper into analysis and see what's going on here. It's more detail, right? Alright, so 4 hour chart. Alright, so once again, we have a series of, let's use our brush. We have a series of lows, lower highs, lower lows, lower high, lower low, lower high here, failed to break the lower low, and then a break of structure. We broke this previous higher high, or lower high, and we created a new higher high. Okay, brand new higher high. Those are terrible H's, forgive me. So we are definitely in, or we were in, an uptrend on the 4-hour chart. And then what happened? Let's see what happened. Did we turn into a downtrend on the 4-hour right here? No, this is a corrective structure. Why is this not a downtrend? Well, let's see. The last lower high, or the last higher low, I'm sorry, was here, and then we had a higher high. So in order for this structure to break, truly, we need a break of this higher low, which did not happen. What happened was price came down, it hit that daily demand zone, bounced, hit it again, went up, hit it again. Now on this third touch, it was a triple bottom. It was also at a 618, and I'll show you guys later. And this is where I entered. I entered here. But my stop loss, of course, was pretty wide. It's behind the structure. So price went negative for a little bit, but then we bounced back. And then as you've seen in the beginning of this video, we are in profit now. Alright, so let's backtrack a little bit. So price never broke the daily structure, or the 4-hour, technically. Never broke this 4-hour uptrend that we had here. So we're still in the uptrend this entire time. So you should only be looking for longs. Now that we're on the 4-hour chart, let me delete these again, or continue deleting these. Alright, now while we're on the 4-hour chart, let's take a look at our structure. Now Fibonacci, I don't use Fibonacci as much for entries other than for extra confirmation, right? And that's when I start using Fibonacci mostly on the 4-hour and 1-hour time frames, and we're going to see that in a second, right? So let's look at this. Okay, so we have our daily demand zones here. So what we're going to do is I'm just going to fade these out a little bit. I'm going to keep them there, but I'm going to fade them out, just so you see the lines, pretty much. Actually, really, I just want to see this, the background. I don't even want to see the lines. I don't want to see the border. Alright, come back over here. Alright. Just so you know it's there, but not, in the way. But it's important to know it's there. Show you guys why. Okay. Alright, now, 4-hour zones. What 4-hour zones do you see? Right, so in order for a supply or demand zone to be that, we want to look for a break of structure, or taking out an opposing supply or demand zone, or breaking a trend line. We want something of significance that lets us know that, hey, this zone is powerful, right? Because in pretty much traditional supply and demand, you're looking for a rally-based drop or a rally-based rally, right? Rally, price goes up, rallies, base, and then rally, right? Versus, or rally-based drop, rally, price consolidates, and then drops. Or the opposite way, drop-based drop or drop-based rally, right? So we're looking for those pauses in price, where price, kind of accumulates, where it consolidates and then takes off again. And you're going to draw from the wick to the body, right? So we're drawing demand zones right now. We're not really focused on the supply zones as much because we're in an uptrend, right? So we're looking for places to enter long. So what do we see right here? We'll start at the bottom. All right, so 4-hour zones, right? The very bottom, by default, is going to be a zone. So from, oops, wrong tool. Sorry, guys. All right. So this zone, this daily zone here, is pretty much the same exact size as the 4-hour zone. right? So we're going to leave that there. Or what we can do is we could draw little boxes also here, right? A little darker, right? Goes up, doesn't break any zones, right? Because this was a zone before. This was a 4-hour supply zone here, right? For dojis, I usually just draw the whole thing. I don't do the wick to the body on dojis. I usually just draw the whole thing, all right? This zone was broken over here, right? So for another 4-hour zone, I'm going to do this one. If it's really small, I just draw the whole thing, you know. So there we go. And then let me add a border to this so you can see it a little bit better. Or we can even switch up the color. Maybe make it green. Okay. More 4-hour zones. Let's see. Down here, right? This zone here. Look at that. This zone. Took out this opposing zone here. This is also a zone here. So this zone was stacked on top of this zone. Alright, went up. Now this is an opposing supply zone. And as you see, price already reacted to it. But I'm not really worried too much about that. I'll show you why. Alright, so this zone, boom. And it came down. Price is going between these two zones. And then it breaks through this zone. Breaks through this zone, so this zone's no longer valid. Boom. Comes down and it touches this 4-hour zone. Now this 4-hour zone is within a daily zone, right? So that makes it much stronger. And then price, boom, shoots up. Now, is this a zone here? Was this a supply zone that was broken? No. Why was this not a supply zone? Actually, yes it was. It was. Because it broke this zone down here. So this was a supply zone. And as you see, price came up, boom, broke this. Now we have a demand zone here also. Why? Because price came up and made a nice engulfing pattern. Nice 4-hour engulfing. And paused. And then rallied pretty hard. So, this is another. Alright, so we have a 4-hour zone here that came up and has rallied all the way up to there, right off of this trend line that's drawn, blah, blah, blah. Okay, so 4-hour zone, boom, goes straight up. So that is, I mean, basically that's why we're in the trade now. We're in the trade because I entered here thinking that price was bouncing off of this demand zone that was here, right? And it was a triple top. And if you draw Fibonacci, right, the last part of our fast method, from swing low to swing high, it was right at a 618 retracement, right? So that's where we entered, right? I put an entry there, entered right pretty much at that third touch. All right, my target is at 7,400. Show you guys why that's there also. My stop loss is behind previous structure down there. All right, so that's a good 2.5 to 1 trade. Very, very good risk-reward ratio. All right, so we entered a little too early. Price eventually came back down, broke through that demand zone, hit the lower demand zone, which is a little more reliable. All right, it faked out a lot of people here. Check this out. Look how many people. Let me delete this position that we had in here. Imagine how many people this faked out. Imagine how many people drew this counter trend line, or drew this trend line, right? Thinking that price was going to continue this downtrend here, right? But we knew it wasn't. Why did we know it wasn't going to continue this downtrend? Because the previous lower high was right here, and guess what? It was broken, right? Plus, so this trend line here, I'm sure there's a lot of people who saw price break this trend line and close, and boom, orders all right here, bunch of orders all right here, short, and they all got faked out, and boom, stops hit. But we're in the trade the right direction because we're trading with the big boys, right? So, engulfing pattern here, it's right at the 88.6 or the 78, closed above the 78.6, touched the 88, right? And it came back, and now it's going up. Now, as far as taking profits, right, where can you take profits at? Well, you can take profits at the previous supply zone, right, if you want to be conservative, because, you know, we're not sure if this is going to break or if we're going to get another bounce down, right? We could get another bounce down, no problem. But what do I think is going to happen? I think with this retracement here, we're going to break through because we're getting a lot of strength off of this daily zone, right? We're coming out of a daily zone with a 4-hour zone within it, right? So this 4-hour zone is really strong. This daily zone is strong, right? So you're trading a daily zone versus a 4-hour zone here. Which one do you think is going to win? The daily zone, of course. So I believe that this daily zone is going to be stronger than this. It's going to break through this, and we're going to see price go all the way up to the next daily zone, the daily supply zone. This is daily demand, so we're looking to trade this up to the next daily supply, right? Because we're in a uptrend. So what do? Also, with the Fibonacci extensions, we have a 27 here and a 127 here and a 161. So let's go back to our daily chart and see where the unbroken daily zone is. All right, so we have a daily zone here. Okay, daily zone there. Oops. But it's been penetrated. Look how much it's been penetrated. I mean, on some charts it's probably broken, depending on your broker. But I mean, this has been penetrated all the way, so I wouldn't call this very reliable as far as the daily zone goes. And just to keep things the same, let's make it blue. Right? So where's the next zone at? Where would the next zone be at? The next zone would be this one right here. Like this. Right? And this zone, as you see, has been hit. Also, now the more times the zone is hit, the weaker it gets. This is not like support and resistance, where the more times it's hit, the stronger you believe it is. Once a zone's been hit, the chances of it being broken through are higher, right? This zone's been hit 1, 2, 3, 4, 5, 6, 7 times, almost 8, right? So do I believe this zone is going to hold? No, I don't. Can it hold? Absolutely. And if it does, then I will be, you know, exiting my position, you know, protecting my profits. If I get, you know, big enough retracement or something like that, you know, or even break even. May move my stop to break even. So where do I think this is going to go? Well, based on the Fibonacci extensions and where I see the next zone at, where's the next zone at? Right here, right? We have wick to the body. You can draw it here, or if you want to be a little safer, you can draw this one, because this candle wasn't like a full, you know, momentum candle. It was more like a big doji. So that would be the next daily zone for me, and it's sitting right there, right? And then we're also looking at whole numbers. Where is it sitting? It's at 74.14, right? Where's the nearest whole number to that? 7,400, right? So 7,400 is right about here, and that is why my take profit for my position, right? Remember we took a position down here. Let's go back to the 4-hour. position down here. Stop loss is there, and 7,400 is the target. Right, so it's before the next daily supply zone. So again, we have a lot of momentum coming up to here. So what do I think is going to happen? I think price is going to come up to this zone like it already has. It's going to retrace a little. We're going to see a retracement, right? Because we have a lot of momentum here. So we're due for a small retracement. And then price is going to break through this zone and come up and hit this daily supply zone there, right? That's what I believe is going to happen. Now, let's say we miss this move, or let's say we're already in this move like we are, and we're looking to add positions to our order, right? If we want to add positions to our order, then we're going to drop down to the 1 hour chart. And this is where I add positions, right? So let me delete our position there. This is how I add positions. Basically what we're going to do is we're going to find all the 1 hour zones and make these a new color. So we have a zone here. We have a zone here. And we have a small zone here. Well, yeah, because this is a zone and this has been broken, so yes, we have a small zone here. And then we have a zone down here that also coincides with our 4 hour zone that's there. Right? So our 4 hour zone, whoops, wrong button. Alright, let's delete this fib. Alright, so if we're looking at entering late or stacking our order, where could we enter again? Because I'm expecting a retracement eventually from somewhere up here. It may start happening now, right? If we draw a trend line, boom. So if we're going to get a 1 hour, we're going to get a retracement on here, and it's going to bounce off a 1 hour zone, we're going to see something like this. Either price is going to come, oh whoa, what's happening? Alright, so price is going to come down here and bounce, or price can come down here, maybe hit the trend line, bounce, or price is most likely, if it gets to this level, as long as a candle doesn't close, you know, fully close below this level, below the trend line. Let's say we get a wick and goes back up. You know, if you get a wick down here, it hasn't closed yet, you can enter. This is your risk, right? Enter long. Now let's say price breaks this trend line, right? This is a 1 hour trend line. What do? If price, let's say price does something like this, right? It breaks. What do? Well, you don't want to rely, if price breaks the 1 hour trend line, then you don't want to rely on a 1 hour zone to bring it back up, right? We're now on a 1 hour retracement. So what kind of zone are we going to be looking for to turn price back around? A 4 hour zone, right? So we have a 4 hour zone here that also lines up with a 1 hour zone. So now we have a 1 hour zone within a 4 hour zone within a daily zone right here. So what we might see is we have price go up, retrace to this point, and then boom, that'll give price enough strength to go and bounce all the way up to our target up here at 7,400. And that, I mean, that's pretty much it, right? So if price breaks this 1 hour trend line, we're looking for a 4 hour demand zone at least to trade long from. Okay. Same thing. If price breaks a 4 hour zone, a 4 hour trend line, then we're looking for a daily zone, a daily opposing zone before we trade in the opposite direction, right? So real quick, what I'm saying is, if let's say we have a 4 hour uptrend, boom, 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 right? And we have a trend line right here. If price breaks this 4 hour trend line, what we're going to wait for is a daily demand zone, right? Drawn. And we're going to wait for price to counter trend back to that daily demand zone. We don't want to rely on these 4 hour zones because the 4 hour trend line's been broken. And once price gets to this daily demand zone, there's your risk. And then boom, as long as it hasn't broken structure on the daily and it's still in an uptrend on the daily, there's your risk, there's your reward. You expect price to bounce up. Alright, so that's going to be enough for this video. If you guys have any questions, just hit me up. Hopefully that made sense to you guys. And like I said, if you got questions, talk about it. But yeah, just keep it simple, right? Fast method, right? Those are the main 4 things I use to enter trades. So if you go back and look at my trade that I had, let's go back over here and look. Now you see why I've entered. We have our daily demand here. We have a 4 hour zone within it that it bounced off of, and now price is going up. Right? We have our zone here, my zone here that's drawn in. But like I said, I don't believe this zone is going to hold, and I believe it's going to come to this next zone. And that's why I have that there. But we'll see. But price is moving up strongly. When we started this video, it was 52 pips up, and we're currently 69 pips up. So just alone in this video, we've, made some money. So get out there, start trading, keep it simple. Like I said, use the fast method. It works. I've tested it. And